go. Here we go with GBPUSD. Trying to long it on 26 August. And this trade went on break even. It was a good fib. Somehow strange impulse upwards in a downtrend. Therefore, this should be taken into consideration. And actually, so if we look closely, this candle disturbs a whole candle size flow ratio, because all other candles compared to this one are just out of place, or vice versa. This is out of place. This one candle was out of place. Well, it wasn't out of place because it was a greater fib, or a move from a greater fib, and this one was smaller than 50 fib. Therefore, distortions are welcomed, or to be expected at least. So we had some very strong impulse. Let's measure this again, because okay, 29.2 is not being directly respected, but from the other impulses it was respected. Let's focus on them somehow. Oh, I remember the red triangle was simply a measure to or a was the measure a weak retracement below 29.2, but this was just a graphical representation. So let's focus on the current move and why did it fail. So it failed mainly because of this distortion, and because it was a part of a bigger fib which was not that perfect. So the conclusion is simple. Let's look perhaps at volume profile. Maybe it's going to help somehow. Yeah, if we look at this like that, we can see that there is P shape in this area. So we might actually expect price to drop a little bit instead of, I'm talking about this area, drop a little bit instead of instantly going up. So this fib was seemingly a perfect fib, although you can see a wicks below 61.8, which is already, which could be a bad sign, and it was actually. But having a bigger picture in mind would actually prevent us from this loss. Okay. If we flip the chart and somehow would decide or would want to short this market, in this case long this market as I wanted, then there's another issue with the fib that has formed there. We haven't respected 61.8. Looking at this like that, so 61.8 was disrespected, price went above, and simply shorting it from there, like, wasn't a bad idea actually, given the distortion, but instead the price pushed higher. So when the fibs are not perfect, then we should probably be more mindful and not just, you know. So once there was a fib and it was failed, so we could try to in this case short it, but after that longing it, we hadn't had a right place to do that actually on the chart. Let's actually focus a little bit more. Like if we focus just on this fib, then we have VHL there. This is getting too complicated, and I don't wanna dive into many potential scenarios, because I just wanted to long it from there due to this fib, and not because of that, not short it because of that, and that's a huge difference. So I wanted to long it, which was actually with alliance to the trend, in alliance with the trend, so it wasn't that overcomplicated. But we will surely dive into such cases in the future. But given the previous bigger fib, which was distorted, we could expect only troubles. Another trade, USDJPY. From slightly bigger perspective, I can see that we are in a ranging market. And this market was actually not looking particularly good. On a smaller perspective, still a ranging market, very choppy market, powerful candle downside, and seemingly good retracement to 61.8, and probably this was the reason why I wanted to short it, because I saw this as an opportunity to actually somehow of a support resistance trend combined with Fibonacci, but it didn't work out. The short was the stop loss was too tight to actually be able to profit on this. And additionally, the candle size flow ratio was poor. We had ranging market, as I already said, and there was no no good entry. Like this one particular big candle would be engulfing compared to another, but it wasn't actually good entry. The ratio was just poor, and if I were to short this market, then I would have to probably short it from higher places. Plus, additionally, there was a mistake because in a immediate term there was a fib. It was a 50 and slightly distorted choppy fib, but it would support an idea of going long instead of going shorter. So this was also trading counter trend. Given the stop loss was this tight, and so it was just a mistake, just a cognitive bias. I was actually trying to short it twice, and so I was most certainly focused on this bigger fib and this bigger retracement, and I saw this as a engulfing candle, so I entered. It wasn't a big loss because it went break even, although it had a chance potential to actually be profitable scalp, but it wasn't. GBPUSD, same stuff. I was trying to long it twice actually, and it did not succeed, but it's more like a scalping approach, because like wanting to enter without any risk involved with entry, not giving it any space to breathe and to actually see and feel that we are we are wrong in our analysis. So again, it was like counting on this 61.8 fib, not looking at the bigger picture, and so it was on a break even. And again, the market structure was actually like choppy. Candle size flow ratio wasn't that good, given it's undecided. It's very like, it's far from perfect, this fib retracement, although it does hit 61.8. This time I've been trying to profit on silver. So, and the silver what it did. So it was hovering around 61.8. Yeah, I was really studying the markets using some crazy triangles. A blue triangle. What it actually is. Oh, the blue triangle is the reversed 29.2. I can see now. So why? Damn. Oh, infinite take profit and infinite. Okay, let's focus. This Fibonacci retracement failed to actually work because there wasn't a engulfing candle. So I entered on this Fibonacci retracement without engulfing candle. There was a small 29.2, which was in a way respected a little bit. There was a small retracement, but as I said, this one candle, this white bullish, wasn't a engulfing compared to this huge doji, and so there wasn't a good structure for a long. So I ignored a market structure, and let's look at the even bigger picture. So we can clearly see that the previous fib wasn't a 50, was less than 50. So it was expected for the silver to not actually particularly strongly bounce from 61.8 in the next fib, in the next wave. And let's stick to that and not. So what is the black triangle? The black triangle is simply it should be a 50, but this hasn't reached 50. So I guess, yeah, I was just doing this wrongly. I was measuring the fib in a wrong way back then. It was such a stupid mistake. How could you do this? So 61.8. It's because you know when you mix metals in Forex, then you get this kind of stupid mistakes, because you measure the fibs and you get no 61.8, but always the market is kind of giving you this retracement. But fib 61.8 is 61.8, and you should measure it like this, from the beginning of the impulse to the end of the impulse, and then you measure the retracement, and the retracement goes to 50% of this move, to 61% of this move, to 100% of this whole move. And so you measure it in the right way and not the opposite, although it would give you actually a good 61.8 fib, or a reaction from 61.8, and this is not the way we do it. So 50%, less than 50%, therefore it failed, and now it makes sense. So now we can trade silver, and not before that. So candle size flow ratio was very not that bad, but actually there wasn't a engulfing one, and we just cleared why there wasn't a engulfing one. And actually shorting this wouldn't be that effective, but shorting it from around 29.2 would give us a good result in a silver market. Let's clean the chart a little bit, and so that's it for the trading view video, and the YouTube video is going to be continued now. So here we go again. AUDUSD. The intention to enter this position was good at 14th August, but the greediness took over. So I placed a very tight stop loss actually moved it to break even, and then it just stopped me out. From what I can see, I have this distracting triangles, which I found helpful back then, but nothing further from true. These are just a graphical representations of the fib retracements, which I was placing anyway in the wrong way. So I struggled with fib placement due to like looking at the silver market a lot, the gold market, and then like flipping the fib retracement, you could actually see that there are some reactions from a wrong placed fib retracement. So this is quite confusing. It's quite important for you and for me to figure out how to use a fib measurement in the right way. So this is how it is right now. So we are focusing on this bigger impulse. This is what is important right now, and we're gonna just dive into why this trade failed and get rid of those old images. This one also. This one too. So here, this one is okay, because this is 29.2 from this impulse. We are interested only in this impulse right now, not in that impulse, but because that impulse is way too far away from our point of interest. We are currently interested only in this one, and so here we go. Yeah, actually longing it was quite hazardous or dangerous. It was a 50% fib, but it could work out. It didn't because of the greediness. There wasn't, if I look at this like that, because otherwise, if I look without this fib, without this impulse, then it was simply a pivotal trading, a range trading, to say at least. And therefore it should be a scalping or some kind of day trading. Like most certainly this stop loss placement was for a scalp. It was too tight, way too tight, even smaller than a previous swing low. So it was a huge mistake. We can learn something else from this trade. So it was 50 fib. Therefore, it failed to continue the trend. So that was the reason why we had a reaction from 29.2. It's not always the case, but it's usually the case. And although it was in alignment with a trend, like knowing today that 50 fib gives us a poor quality long, then we should rather be focusing on shorting the market instead and looking at the market structure. There wasn't a real engulfing candle supporting the idea of going long, so I would say still the candle size flow ratio is not good, is distorted. 50 fib, that's the basics of 50 fib. 50 or below 50, or another type would be above 61.8, which is also not desired. So there's also a wave count, 1, 2, 3, A, B, C in a way. So I noticed, I was watching my previous video, I was mentioning some guy named Elliot. I don't know this guy actually. There's a guy named Elliot. So that's the difference. And so we can observe a small Elliot here forming and actually playing out. But usually when we have Elliot, then we have a continuation of a trend. Depends on how distorted it is. So in this case, we do not continue the trend. We are falling down and later continuing the trend. So these markets are actually printing the Elliots in many sophisticated ways. So you can actually see that the 3AB is also a beginning of the new Elliott. So this is the first wave. Here's a second distorted one, and third, the last final, and then we have correction A, B, C again. So this is how it actually goes all the time. It's important to have this in the back of the mind, but also we don't have guarantee that that the market is going to constantly be pushing the price in a form of Elliots, and so actually they are interfering on each other. So as you can see there, so the highest wave is the first wave of another Elliott. It's quite complicated to actually grasp all the time in mind, but you know, the triangles actually helped me to grasp the idea of this, because you can actually see here you have one big Elliott, and the blue triangle is already another Elliott, but slightly distorted. And this velvet triangle is also a Elliott, but distorted. And some could argue that you could have a harmonic patterns harmonic patterns over there, but I'm not that good to focus on them. I just want to be a profitable trader, not sophisticated trader who knows everything about markets. It's not my intention to know everything about this. So yeah, it could help actually, but the biggest help in the market is simply fib, because this all should fit into a simple fib. And we have a fib, and we observe what happens to the 50 and 61.8. And so we could decide whether we have a distorted fib, or we have a perfect fib, or we have something below 61.8, which could give us different outcomes. And this is to be studied on each individual trade. This is the best case study, because you then actually have some like emotional attachment to what you did, to the price action, and this is the best way to learn on your own mistakes, and not on the mistakes of others. Like some people are capable to learn on the mistakes of others, but I'm incapable of that. I have to admit that wholeheartedly. I'm incapable to learn on mistakes of others. EUROCHF 14th August. Well, I don't know why I would enter this trade. Probably due to some FOMO, a need to enter position. But other than that, there was no reason. It was like at this point of the market structure, it was clearly a range trading. I was probably lacking of bigger picture and wanting to enter this. No engulfing entry actually, but still, it almost played out. It didn't because of the tight stop loss. So the market structure was choppy, which I already said. And like on the bigger picture, we can see that this was like again some type of Elliott wave. It was actually very calm one. Then we had a retracement to 50, and because it wasn't a 61.8, we had to bounce back from 29.2, and so we went below 61.8, and then price struggled to bounce again or higher, so it bounced again from 29.2, and so it goes. So that's why it's so important to have this bigger picture in mind and look at those bigger fibs and just not force the trades. Trading is actually boring as hell, and only if you try to make something out of this like forcefully, then you get some kind of excitement, but also mistakes, a lot of mistakes. Of course, you can try to scalp it as much as you like in this kind of ranging market. If you want something more to happen to your account, but other than that, here it wasn't actually by any means a good entry. No fib. It was just a support resistance kind of trade. This one on EURUSD was actually very good setup. 14th August. And if we had a bigger picture in mind, if I had a bigger picture in mind, I would actually profit on this trade a lot more. And so I wanted to simply show you why. It was a 61.8, actually below 61.8, which was important because it resulted in a market structure which did not broke above the previous high, and on the bigger picture it was a ranging market from a impulse that haven't reached a 50 fib yet, but there was a 29.2 level from that bigger fib, which was working like an extra confluence, and that's why we had this nice shot upstairs, so upside. And having this in mind, so impatience, narrow vision, because I was only looking at this, I hadn't had the previous impulse in mind. No engulfing entry. Like I have entered there. It was probably because the price stopped. I was looking at 30 minutes probably, or 1 hour, and haven't waited for the candle close even. Just saw this kind of retracement. Okay, I'm impatient. I don't want to look at chart many times. I don't want to come back to the chart, and so it went like this. And to actually have some more data, something more to talk about. let's look. So if you pay closer attention, then this market structure gave us a B shape volume profile, which was supporting the idea of going long, at least on a short time frame, on a short period of time, and in a short window. And it did, so it worked. So I guess B-shaped volume profile would be something to add there. And beyond that, the candle size flow ratio was actually not that bad. A little bit choppy, but normal, I would say. But no engulfing entry over here. If any engulfing entry, then I would say this one, and it would still work out given the environment. Let's look at this from a little bit bigger perspective. Yeah, market was choppy actually in a bigger picture, sideways, moving sideways, trending up, but in a place that everything could happen. But we didn't need it such a big picture to actually enter or think about this trade. It was just this fib and perhaps some additional confluence from a little bit bigger perspective. Let's study the case of GBPJPY. I remember this trade. I failed this trade 11th August. Simply, I was counting on GBP repeating the same type of movement which it did previously. So continuously failing over 61.8 and reaching almost 88.6, and it did that for a consequent number of times. I thought like we had some consolidation over there, and I thought that right now we are probably going to repeat the same stuff. So it was a wishful trading. There wasn't a market structure supporting this kind of move. No fib. This was like calling the top type of trading where I was calling the top. So it was structurally bad. On a bigger time frame, we had this market like consolidating all the time, and we have it until not until now, but for a very long time. The YouTube video, I mean the trading view video is ending, but the YouTube video is continuing, and so we're gonna probably study the case on this pair on YouTube a little bit closer. So that's it for trading view, and we continue studying this on. So no, we cannot. Here we go again. This is all combined. USD. Sorry, I'm so sorry. The intention to enter this. So here we go. We continue with trading view and YouTube. So from a fib perspective, it was a. I tend to have a bias about this GBP market. Like I had some special relationship with this market because I thought that I found a golden grail, like seeing this kind of behavior I like to short it. Somehow I enjoyed shorting it previously. And so, at least in my backtesting, because I guess there wasn't a real position. So looking at this, we have a fib, which was 61.8, but it failed. We could, at that point, probably try to enter some kind of short over there with some engulfing candles, but actually this was a good place to look for shorts, not this. Why? Because this could turn out this resistance could turn out to support, but it wasn't. It turned out to be a resistance. Well, just the other way around. I'm sorry, I should actually pay more attention to what I'm saying. Anyway, the market was choppy. The structure was very choppy. And suddenly we have something that is similar to a good fib setup, but it didn't actually respected that fib. We went through. So this fib is invalidated. We should be focusing on another fibs. We have no sign of a like fib respecting any fib in a way that should be like considered a fib retracement trading. Therefore, actually I should be staying out of this market, or like continue to go along with the trend and long it. That would be the only reasonable approach towards this kind of market. If I was kind of forced to trade something, and in this case it would work out a few times, but then we entered a consolidation period. And this consolidation period went on and on and on. So GBPJPY is a difficult market to actually find some valuable fib insights. It wasn't a good trade. Actually, this trade shouldn't take place structurally. Another case, USD CHF, and let's scale in. So if we scale in, then we have immediately a fib setup, which was not respecting the range, the golden zone, so between 50 and 61.8, and then a big candle in the upside, which was probably trigger for me to enter long, and it probably most likely would play out at least like in the 1-to-1 risk-reward ratio, but my stop loss was too greedy, too tight, too safe. But let's look at this in a little bit broader range, and then we have a retracement 61.8, a perfect, almost perfect, given only this huge imbalance candle, which was actually out of the place compared to the other ones. So this would actually suggest downward pressure, and so the market behaved accordingly. reacting from 61.8. But this actually would not support going long. This would support going short. So looking for shorts from there. But looking a little bit broader, so we have a fib, a impulse that is interesting in this case. Looking at that, we have some golden zone reaction, quite good fib, but then a series of consequent other fibs that are also good. So this made the price consolidate a little bit in this range. So actually it wasn't that perfect setup, but it could give actually a good results in both directions. So it was more like a 61.8 trade. But what happened with the market? It did not continue to go higher. Instead, it failed to make new highs, and the market like ranged and consolidated towards bearish bias, eventually falling below How did that happen? How did I? Oh yes, nice trick. I didn't knew. Volume. So we have a volume. So the volume suddenly increased. Okay. But let's look at the shape of the volume. So why wouldn't it be a good idea to enter long immediately after having this particular retracement? And let's look at the volume shape. It was a P-shaped volume in this range, so it would suggest that the weight is above, so it has to retrace, or it is going to be retracing a little bit more instead of immediately jumping higher. So probably going over bigger, like wider stop would be more logical and more safe. But actually, this was almost a winning trade. So wider stop loss, being more mindful of market structure. That's it. Additionally, there's a thing on RSI, because I was thinking, I'm not looking at RSI at all, and let's look at this. The RSI is flat during this whole consolidation on the price, which is actually a sign of strength. But to be quite honest, RSI is most useful on time frames like 30 minutes, 15 minutes, and it's more useful on metals and indices rather than on Forex pairs, because Forex has some slightly different rules. At least that's my observation. USDJPY 7th August. Long position. Stop was very tight. Stop loss was very tight. Oddly enough, it would be a good trade. It would be a profitable trade. But it was a pivotal trading, so ranging market consolidation. It was more reasonable actually to short it from that area because of this fib. We had a fib that was closing below 61.8, which would suggest, as we've seen before, some kind of weakness or strange behavior in the market, and like some open space for experimenting in the range of this movements. So ranging market, I would say, and this ranging market went for a while, actually many days, 18 days and beyond. And beyond. So it's amazing how one fib can hold later the market for like months, even weeks. So week after week after week. But yeah, we are climbing slowly upwards. Then we have here 29.2. The reaction from that, it's not quite right to say, but with this kind of replacement, it could be like appropriate to even think about this as a 29.2 level. But of course, we could probably find something else closer. Anyway, let's focus on the point where we were. Pivotal trading. Actually, this could work. This could work if this was a support resistance trade. On the previous chart, I was you probably don't see this. On TradingView you see this, but on YouTube you don't. No, it wasn't. It's not this. Okay, never mind. I'm not gonna probably find it. Oh yes, here it is. So stop loss should be at least 100% of the biggest candle in the range of placing a order, counting the wicks. Ideally 120%. So in this case, if we would abide to this rule, then probably we would have a bigger stop, but we would still be probably stopped out by a pip, something like that. So sometimes you just have to accept the losses. That's it. Nasdaq, US Tech, 24th July, entered long. There was a time in Nasdaq where it traded aggressively, mainly upwards. Unfortunately, I wasn't around actively trading Nasdaq that time, but it gave very nice setups time after time. Something similar to EUROTRI or USDTRI. I'll show you, but it also stopped when I got interested in the market. It's going to be interesting. I'm going to show you, but right now let's focus on US Tech. So previously, you see, like 7 days before entering the trade, we had a nice pullback to golden zone, slightly like you know, there was a time when traders called this a stop loss hunt or something in this type. But right now you have to actually build a strategy around this kind of behavior. So if you see disrespecting 61.8, then you would probably expect some kind of outbalance on the Forex, not on a Nasdaq. But nowadays there's completely different story. So nowadays you have something completely else, like trending down and disrespecting any kind of pullback, and then choppy market structure, and it gives me actually headache to look at this. So let's go back to the past to learn from the trades, and then we're gonna focus on a current market. So basically the reason this trade failed was too tight stop loss. It should be actually so if I had pressure to enter this kind of trade, then I should move my stop loss even beyond 61.8. And in this case, it was very tight. I was counting that this is going to be a shallow type of retracement or pullback, which it actually was. But it wasn't an ideal place to enter a market like that. Although seeing a price action like this and market acting shallowly might actually work out, if not this greedy stop loss. And here actually you see something similar to what we were discovering and experiencing on Forex. Retracement to the 50, and it caused a price to act a little bit flattened, to print a little bit flat. That's why probably this next trade stop loss should be a lot wider. So no engulfing entry candle, just a wishful trading, probably counting on some support, but very greedy approach to the market.